A few years ago, Americans were using buy now, pay later apps to buy sneakers, gaming consoles, and luxury skincare products. Today, many are using them to buy groceries, gas, and fast food. And that small shift may reveal something far more serious happening beneath the surface of the American economy. Because when people start financing basic survival, it's no longer just about convenience. It's about pressure, quiet financial pressure that millions of people are carrying every single day. Last Thursday evening in Phoenix, Arizona, 34-year-old Melissa Carter stood in a grocery store parking lot staring at her phone before paying for a $96 grocery bill in 4 installments. Melissa works full-time in healthcare administration, makes around $62,000 a year, and by most standards should be doing okay. But rent went up again. Car insurance jumped nearly 20%. Her student loan payments returned. And groceries that used to cost $150 a week are now closer to $240. She says the Buy Now Pay Later app helps her breathe for a second. Not because she's irresponsible, but because paying everything up front suddenly feels impossible. That's the part of this story many people misunderstand. This isn't only about debt. It's about psychology. Americans are increasingly turning to small installment payments because the human brain naturally prefers immediate relief over long-term consequences. Behavioral economists call this present bias. People choose short-term comfort, even if it creates future stress. Splitting a payment into 4 smaller pieces feels emotionally safer than watching a large amount disappear instantly from a checking account. The danger is that the brain stops treating debt like debt. Apps like Klarna, Afterpay, and Affirm were designed to make borrowing feel invisible. There's no painful moment of handing over cash. No awkward loan officer. No dramatic warning signs. Just a smooth button that says pay in full. And psychologically, that changes everything. Americans are now managing dozens of tiny payments at once, often without realizing how much of their future income is already spoken for. One payment for groceries, another for concert tickets, another for clothes, another for takeout. Individually, they feel manageable. Together, they quietly drain financial freedom. What makes this trend especially powerful right now is that many Americans are trying desperately to preserve a lifestyle that inflation has slowly made more expensive. People don't want to feel like they're moving backward. They still want date nights, vacations, new phones, and normal family experiences. And when incomes fail to keep pace with everyday costs, debt becomes emotional pain relief. It becomes a way to avoid admitting that life has changed. Financial experts say this growing dependence on installment spending could become dangerous if the economy weakens further or job markets slow down. But the deeper issue may be cultural. Debt no longer feels alarming in America, feels normal, and that normalization changes behavior. People stop asking whether something is affordable and start asking whether the monthly payment feels manageable. The uncomfortable truth is that many financially stressed Americans don't look stressed at all. They still drive decent cars. They still post vacation photos. They still go out to dinner. But behind those appearances are shrinking savings accounts, rising balances, and constant financial anxiety. And that may be the biggest lesson hidden inside the buy now, pay later boom. Financial struggles today are often invisible until they suddenly aren't. Because real wealth is not the ability to make payments. It's the ability to sleep peacefully without worrying about them. Money doesn't change people. It reveals them.